Hey, how's it going, traders? New people, welcome to mentfx, and old ones, welcome back. In this video today, we are going to take a look at a few trades we sent out, a few things we were looking to take this week, of course, to wish you all a Merry Christmas, and to look at some of the concepts about Wyckoff and a strategy that you can begin to employ, how to employ it, and how to begin studying the market as you work yourself through each market, each pair, each indice, commodity, or whatever market you are interested in looking. So excuse what we have open here. We were looking at some oil futures for the community earlier today and a few stocks here on the side. So due to the fact that it has been Christmas and every market is ultimately closed, the only one that remains open through all this is, of course, Bitcoin and mostly crypto. So like me with my tendency to want to trade and look at stocks or look at charts, I decided to look at this live chart, and we were actually able to get into a few very nice plays on Bitcoin. So we were watching, I believe, the 1 minute. These were all areas that we had decided on the 4 hour. And the reason we are going over this very quickly is because it's going to be important as part of what this video is basically made to do. And this video is, one, to give you some study material to look at, to work through as you continue your Wyckoff journey, as you continue learning how to employ Wyckoff, and as you continue to use institutional concepts and mark them out on your chart, backtest, and start to put everything together like parts of a puzzle until you have basically the finished product where you can take it, look at any market, and spot exactly what I spot or what we can call institutional bias on by yourself ultimately, right? And again, this will apply to any market. So what did we see? This trade was actually based off of a 4 hour play, I believe. So let's quickly jump onto the 4 hour chart right here. Let's zoom in on this a little bit. So what happened is we began to see this right here. This right here on an hour chart, or a little bit higher, is a reaccumulation. Right, we had that marked up for the team, but right now I have it deleted since I was looking at these areas here. And after this reaccumulation played out, we had the spring occur, and we started to see those higher prices emerge. Now, as we saw those higher prices begin to be printed in Bitcoin, we were expecting higher prices from Bitcoin, despite the fact that it just hit over 20K, 25K, or whatever anybody's expecting. The thing is, we don't care what this number here on the side is. What we care about is what is happening on the chart. The chart and price movement will tell you what price wants to do, not how high or how low it is. Okay, so we had price move up, and we were looking at all these areas to be buyers. We did actually catch a very nice buy at this order block here. As you can see, it came into it. However, this was not the one that we ended up sending out. As prices continued higher, you will notice that we had this breakaway, and as we had this breakaway, we left a little bit of inefficiency here on a 1 minute between this candle wick right here and this body. So when this candle began to be printed, we were expecting to look for buys anywhere inside of this order block here. So this down move that took liquidity on a lower time frame. So if we jump onto an hour chart now, what you'll see is this down move that took out liquidity here, leaving behind this order block right here. And then this move through it, right, making that a structure block, allowed us to look for potential buys as we began to retest it. So as we began to retest it, or when we were very close to it, we were looking at that area on a 1 minute chart. So if we move over to the left right now and take a look at this, right, this is our break away from that area. So this red line right here and this red line right here denote the open and the 50% of that order block that occurred on the 4 hour. So don't be confused by all the things here. Ultimately, it's nothing more than an area I was expecting to see prices go higher. Now, as we saw prices take off here and create the preliminary supply, create the buying climax, and volume, of course, supported it, we followed that down to our automatic rally, our secondary test, which created, right, what have we been talking about a lot? Those equal highs. Again, what's above those equal highs? Liquidity in the form of stop losses and buy stop, right? So at this point, we knew we wanted to take those out. We didn't know if it was going to happen instantly, and then we did, creating that up thrust, which honestly also created equal highs in the form of liquidity again. So we could have looked for this to get taken out, and we were expecting that. We had this drop down, which took out this ST that was formed earlier, making that ST and B. And at this point, we were aware that we most likely might be in a reaccumulation. Now, as this slow price action began to form right here, and you can see the decline of volume was basically at the lowest it's ever been, right? Showing you that all those orders of sells are being transferred into the composite man's buys. Now, again, we are going to talk about volume in the mentorship this Sunday, and most likely we will have a video released on it publicly on YouTube a little bit down the line after we work through it a little bit through there, so we can get some better information and, of course, solidify that when it comes to making a video. But ultimately, we had this creek down, which, again, a creek in a schematic is nothing more than basically the condensed area in which we have the transfer of supply into demand or demand to supply, or buy orders into sell orders and sell orders into buy orders, right? So in this case, a lot of sell orders from the masses or dumb money was basically transferred to composite money, right? To composite man, to the smart money. We had the spring occur, and we were already expecting the spring to occur at what you'll notice here, this order block. So before we began to see this accumulation occur, you'll notice that within this order block, right? So remember, this red line and this middle line right here, these two red lines, denote the open in the 50% of a 4-hour order block. So we were expecting for price to come into potentially this area here, or this area here, or somewhere within that, right? And what you'll notice is we denoted this area right here because, right, this is going to go back to all the things we spoke about before. Price moved down, taking out short-term liquidity. Again, this is a 1-minute chart, but it still applies. This will apply to every single time frame and to every single market within which there is someone with more money involved, which is often everywhere, okay? I mean, in that case, any market. So we had this markup occur, and we had this area here that acted as that last down candle before that up move. And what you'll notice, if we zoom in here, is that we also have an imbalance that basically spans from this wick, from this highs wick right there, to this wick low right here. And about 50% of that is this mitigation prior. And what you'll notice is we also began to print equal lows, right? Creating what? Liquidity. So we know that if prices were to come down and move through here, it would make sense for them to stop at this order block and then to move away, right? Grabbing those orders and move into the orders up here. So like we expected, after this ST beam was made, we were expecting the spring to be made in this area. And we were okay with entering buy positions from here because of everything that had surpassed. Now, we wouldn't be sure if this was the buy we wanted to take if this had played out differently up here, right? But because we began to see this consolidation, or in our case, this distribution / reaccumulation begin to occur, and then after that, we began to see a creek begin to occur in which we were expecting, the move down through it, creating that spring. Now it made sense to expect this area to be the one where we would see that accumulation. So again, despite the fact that it was, I believe, Christmas Eve or Christmas, right? With every market closed, with no news being affected, nothing really in the market happening, everyone with their families at home doing whatever they were doing, right? Bitcoin still gave you a perfect institutional level setup through Wyckoff, inefficiency, order blocks, and all the terms and concepts we've been covering since the beginning and inception of this channel. So of course, if a lot of this doesn't make sense to you, make sure you watch through all the things before and then make your way through the mentfx masterclass, join the mentorship if you'd like to, and slowly things like this will begin to click in your head and you'll be able to see a lot more. So the creek occurred and we had that spring that came right into our entry, right? We were expecting the open as well as the midpoint, but we have to also realize that at about the midpoint of this entire inefficiency was just about the open of this block. So we were expecting it to be on the open. That's why we took it here, right? Of course, you could have looked to take it at half to get better RR, but this was way too small of a difference, and we wanted to make sure we were part of this move, right? And after that, we instantly saw the move up and away. We were looking for more reaccumulation along the way. We believed it was going to occur here, but then we had the move through and liquidity was grabbed, so nothing happened there. We began to form another creek, right? We came down, took off, and began to reaccumulate significantly higher. Here's just running through the lows, the test. We didn't get involved here because we were already okay with this. And as we began to take off, we began to trail this as per the lows. I do believe we exited just above this UT, so at 1 to 10, just because it was, it was Christmas and we were trying to close out the trades, so we trailed it. But again, if you trailed it as per normal structure or as per normal Wyckoff structure, you'd be trailed to this low as it formed. You'd then be trailed to these lows as it formed, these lows as they broke higher. Then maybe as this high got broken right here in the form of this UTAD, you might have trailed all the way to right here and then gotten stopped there, or you might have recognized that this was a reaccumulation And now, as you can see, prices are taking off even higher. So total, this trade, if you held on from yesterday, that's when we took it, the 25th, as you can see, this is when we sent it out. It has already traveled about 1 to 44 RR. So this is how RR can be basically made in the market and can be made relatively easily. And what you'll see here is we did nothing more than took the open of an order block, the 50% of an order block on a much higher time frame, expecting higher prices. Had price trade into that in the form of more inefficiencies being met, liquidity being created, Wyckoff being created, and then got involved in an area that would make sense from an inefficiency standpoint. Hence this trade. And again, we were looking for potential re-entries along the way. We didn't get any, right? We were also looking for one right here. We didn't really get the test. We kind of just took off. Price is most likely, again, heading into the areas in here, lower time frame order blocks, or higher time frame order blocks, sorry, or here, before continuing its potential mark up, right? And that's how we would, and this is what we would be operating under until we start to see new lows being broken, at which point we can, take a step back and again reanalyze. But just like that, we were able to catch a beautiful trade at a time where technically no trading should have been taking place. And the reason I want to bring this to your attention, right? So this isn't just a normal example, and you're going to see a lot of examples over the course of this YouTube channel, and of course everyone in the mentorship has seen examples every single day. As you see these examples, you'll see and be able to learn a little bit of different stuff from each one. So again, from volume standpoint, right, what do we have? Prices come to make highs, giving you those high volume spikes, right? So those are the buying climaxes, right? You have volume being created into, basically you have supply being created into demand, right? So basically sell orders are made into buy orders. Hence you see these upswings in volume as we start taking off higher. And this right here is representation of how you can sometimes expect Wyckoff or expect certain direction or bias using volume. Because ultimately, and we'll talk about this later, when volume begins to get lower and there's movements in a certain direction, like lower lows being created, then you know that the lack of volume is there because despite the fact that price should be moving a lot more and volume should be taking off, it's not. Which means that money is being traded hands. And in this case, that creek, this one here, or even this one here, the one we actually entered off of, is nothing more than the consolidation of price between supply and demand, right? Or orders of buys and sells, and all of those sells on behalf of dumb money or just people that are not as well versed, or people that are just thinking that it's going to be a sell there, getting transferred into buys on behalf of the composite man. And then we have the explosive moves higher, as you see here, and we can look to be involved on those as price marks itself upwards, right? And we can look to be involved until we are told pretty much otherwise. So in this video, the reason I wanted to go over this was to show you guys how much you can take out of just a single entry, right? Again, we did not, and I'm not saying we did, catch this entire move. Like I said, I believe we closed just about at this high, or other people that began to trail it normally might have trailed it to here if they were trailing aggressively, or other people might have trailed it to just about this low until it just broke, right? So that was an easy 1 to 36 that you could have locked in. The point of this is to understand that the fractal nature of the market is the most important thing, because when you realize where the higher time frame institutional orders lie, like we've gone over in previous top-down analysis examples where we looked at areas on a monthly, down to a weekly, to a daily, a 4-hour, a 1-hour, all the way down to the minute, you can do this across every single pair. Now, the reason I wanted to put this out as well is because this will show you a lot of you, or answer a lot of your questions concerning time and price. So a lot of you believe, or have been led to believe, that you need for price to be met at a certain time, such as a New York session, right? Some kind of overlap, something like that, that will give you that extra confluence to be able to enter. Now, that is not a bad way to trade. Actually, I believe ICT trades that way using time and price. He cannot trade price if there's no time involved with it. Like that's one of the things he says. You can go check out his stuff. He talks about it all the time. For me, though, the traces of smart money occur at all times. I don't care whether it's Christmas, whether it's Thanksgiving, whether there's a tsunami that is literally hitting your house as you're looking at the charts, right? There is going to be smart money footprints that are left in the market that are going to be respected if you understand what the order flow is. So just like we said, it's Christmas, right? Nobody's trading. No trading floor is open, right? Whoever's operating Bitcoin, maybe like China is, I don't even know if they're having their new year, whatever it might be. and all of a sudden Bitcoin is marking up as per 4-hour order blocks, inefficiencies being filled, liquidity being created, liquidity being met, liquidity being taken out, and huge Wyckoffian cycles in the form of markups and reaccumulations occurring. So the point of this is to understand that there is no specific time that I trade by. If I see something develop, whenever it is, if the traces of what I like to see from an institutional standpoint, whether it's Wyckoff, order blocks, or anything else like that, liquidity creation, liquidity being met, taken out, order blocks being created, order block 2.0 is being created off those order blocks, and then the moves higher, then I will be involved because it does not matter to me what the time is. So I hope this served as a good example of all that, and I hope you guys understood how time and price does not matter too much and how we use this area to be involved in a accumulation schematic for higher prices on Bitcoin during a time when technically we shouldn't have been able to expect anything in the market. So thank you so much for watching. I hope this made a lot of sense. Please stay tuned because we're about to come out with a few more videos that will also undergo some things concerning the fractal nature of the market, Wyckoff, and potentially something concerning volume. So thank you so much for watching. I hope you guys enjoyed this. Leave a like if you did. Leave a dislike if you didn't, but let me know why. This was mentfx. I hope you guys are loving your time here, and Merry Christmas to all of you. Thank you.